and her husband, a small business operator. Samantha's a paralegal from Guilford, Connecticut, experienced a similar situation. She had her credit card interest rate raised from 12% to 27%. Why? Because she was 3 days late on a credit card payment for the first time in 18 years. 18 years. And she and her husband, who own a small business, saw their credit limit drop from $31,000 to just over $4,000. The credit limits from $31,000 to just over $4,000. A small business, 3 days late, first time in 18 years, and they watch the rate jump to 27%, and their credit limits plummet down to a point which pushes that business into jeopardy. So I would ask my colleagues, what is a family in this economy supposed to do if they're counting on that credit card help them through a medical crisis? That one, a patently unfair decision could mean the difference between scraping by during a recession and a financial catastrophe. Our legislation that Senator Shelby and I have put together prevents credit card companies from unjustifiable anytime, any reason rate increases on existing balances for people like Samantha Moore and Christina Jurgens. Our bill also provides credit card issuers from increasing rates on a cardholder in the first year after a credit card account is opened, and requires promotional rates to last at least 6 months. And our bill prohibits issuers from changing the terms governing the repayment of an outstanding balance. For the first time ever, we put provisions in place that ensure that risk-based pricing won't always work against the consumer and drive rates up. This legislation says that if your issuer has raised your rate since the beginning of the year, that they have to review your account within 6 months and bring the rate back down if the review warrants it, thus putting an end to the kind of risk-based pricing that always costs the consumer more and never less. Secondly, Mr. President, our bill puts an end to the exorbitant and unnecessary fees that drive families further into debt. Not that long ago, if you went over your credit card limit, your card was declined at the store. I'm old enough to remember when that could happen. That awkward moment when you've gone to purchase something and you're standing in line and all of a sudden that clerk says, "I'm sorry, but you've been rejected." That's always an awkward moment, particularly if people are standing behind you in that line where you have to take your purchases and sheepishly walk back to where they are and put them back on the shelf because you went over your limit. It wasn't comfortable, but it protected you against going over the limit, particularly if you wanted that. In those days, of course, you didn't have to ask for it. It happened automatically. Well, that has all changed, of course, in recent days. In fact, the issuers, enjoy that moment, because when you walk up and purchase something, despite the fact that you may want a fixed rate on that point, and you go over, of course, then the penalty fees and other charges pour in, and of course that becomes a bonanza, and additional penalties collected. Now, I'm not suggesting the consumer doesn't bear a responsibility, but in the past, there was a responsibility exercised on both sides of that equation, of borrower and lender. And here, of course, now lately that equation has been disrupted. Today, we've repeatedly heard about cardholders being charged enormous fees for unknowingly going over a few dollars over their credit limit. Our bill, Mr. President, prohibits issuers from charging hidden over-the-limit fees. It says if cardholders want to go over their card limit, they have to opt in with their issuer, putting the choice of going over the credit card limit and paying extra fees squarely in the hands of consumers, not the banks. Our bill also requires penalty fees to be reasonable and proportional to the violation. Further, our bill prevents companies from charging fees for customers making payments by mail, telephone, or electronically, and strengthens protections against excessive fees on low-credit, high-fee credit cards. The days of issuers unreasonably jacking up these fees to unreasonably high levels to make money on the backs of consumers will be over. Third, Mr. President, our bill protects the rights of financially responsible credit card users. Say last month, for instance, you had a credit card debt of $1,000, and since then you paid $900 of that debt off. It's not uncommon for some credit card companies to keep charging interest, not on the remaining $100 of debt, but on the full previous $1,000 of debt. Our bill puts an end to this so-called double-cycle billing and says if the credit card company is delayed crediting your payment, you won't be charged for their mistake. Our bill also requires credit card statements to be mailed 21 days before the bill is due rather than the current 14. The bill also encourages transparency in credit card pricing. requiring the General Accountability Office to study the effect that interchange fees have on our merchants and consumers. And I want to thank a number of my colleagues who have expressed a strong interest in this subject matter. We're just going to have a study done in this bill on this issue, Mr. President. It's a complicated area, the interchange fees, but a lot of retail stores are deeply concerned about these fees, the excessive charges they believe exist, and they would like to see some changes. And so I promised my colleagues who expressed an interest in this that we'll take this on. I believe it was Senator Corker of Tennessee who has written I think, a stronger study provision than the one we had originally crafted, and I thank him for it. And I know he has a strong interest in this subject matter, as do other members as well. And so we'll get to the interchange fees at a later date, but certainly the study would give us a better framework in which to consider legislation. Fourth, Mr. President, our bill provides far better disclosure of card terms and conditions. One member of the credit card industry recently told Time magazine, and I quote him, "The American people can't manage their credit," he said. Well, that's not hard to understand why. A quarter century ago, Mr. President, a typical credit card contract was about a page in length. Today, it's 30 times as long and 100 times more incomprehensible. You practically need a microscope to read what it says and a law degree to understand what it means. Mr. President, if this financial crisis has taught us anything, it is that consumers can only make responsible decisions if they have all the necessary information. The American consumer should not have to live in fear that a clause buried in the fine print of their credit card contract might someday be their financial undoing. Our legislation also requires credit card issuers to provide far better disclosure of credit card terms and conditions. The bill says card holders must be given 45 days notice of an interest rate increase. The bill mandates that issuers disclose to consumers what card terms have changed, and it forces issuers to disclose how long it will take to pay off a card balance. If you only make minimum payments, something our colleague from Hawaii, Senator Dan Akaka, has led the fight for over many, many years. The bill also requires the federal post consumer credit card agreements on its website. Fifth, our bill insists on fair allocation of payments. Many cardholders hold multiple credit card balances with multiple interest rates. If you send an extra $1,000 along, for example, with your minimum payments, that amount should be credited to the account with the highest interest rate first. Our legislation ensures that it will be. Our bill also prohibits issuers from settling or setting early morning deadlines for credit card payments. We all understand that we have to pay our credit card bills on a specific date. But what too many card companies don't tell you is that if the date, it isn't just the date of the payment is due by, but often a specific time in the day. And in too many cases, it's in the morning rather than the end of business of that day. So, for example, if you pay your bill, call the company, or make an online payment before the close of business on a due date, sometimes you'll get penalized for a late payment because the credit card company's deadline, unbeknownst to the cardholder, was at 10 a.m. that morning on the due date. This legislation puts a stop to that as well. I should add, Mr. President, that for the very first time, the federal government will provide new protections for recipients of gift cards. And we owe our colleague from New York, Senator Schumer, for his leadership on this issue, and I thank him for it. This legislation will make it easier for recipients of gift cards to cash them in under the Schumer provisions. If you receive a gift card, your balance won't disappear before you have a chance to spend it. Sixth, this legislation includes robust protections for young people and students. Recently, my 7-year-old daughter received a credit card solicitation in the mail. We laughed it off, but it brings up a serious point. Young people, and ultimately their parents, are faced with an onslaught of credit card offers, often years before they turn 18, and usually as soon as they set one foot on a college campus. Just as we saw in the mortgage crisis with lenders and borrowers, too often issuers offer cards to young people without verifying any ability to pay or repay whatsoever. This is particularly true for students, Madam President. According to Sallie Mae, college students graduate with an average credit card debt of more than $4,000. That's up from $2,900 just 4 years ago. Nearly 20% of students, college students, have credit card balances of over $7,000.